Wall Street is extending its steady rally and conquering a new one-year highs. And the Federal Reserve didn't alarm but inspired the market. Today, the stock market is ready for another bullish session. The information background is jam-packed with events, causing gyrations in the market quotes. The new information could serve as a catalyst for a further rally or a decline in the benchmark indexes. Wall Street traded quietly ahead of Powell's remarks. Still, the major stock indexes sustained the uptrend. The Dow Jones grew by 0.23%, having locked the longest winning streak since 1987. The Nasdaq rose by 0.12% and the S&P500 inched up by 0.002% to close at 4,566 points. The New York pre-market is more active today and futures on the stock indexes traded higher. The S&P is likely to trade in the intraday corridor between 4,570 and 4,640. The major stock indexes finished the session yesterday almost flat, following the Fed's policy meeting. The regulator did not spring any surprise, having raised the official funds rate by 25 basis points, as expected. It was the 11th rate hike in the last 12 policy meetings. Fed Chairman Jerome Powell stated that the central bank plans to take a meeting-by-meeting approach, closely monitoring fresh economic data. He also noted that a rate cut was unlikely this year. Powell said he expected a slowdown in the economy and less robust employment in the labor market. This is needed to ensure that inflation is brought down to the 2% target. After his remarks, Goldman Sachs said that the key interest rate would be put on hold in September. As for the corporate news, investors are absorbing high in anticipated reports from high-tech giants. The picture is ambiguous. Microsoft shares fell by 3.72% after presenting an aggressive spending plan for new AI-powered services. Alphabet surged by 5.78% after parent company Google's second quarter earnings beat Wall Street's expectations thanks to robust demand for its cloud services and advertising. Meta's shares rose by 1.39% after Alibaba's cloud arm said it would support Facebook's Llama, an open-source artificial intelligence model. Wells Fargo shares increased by 2.11% after the bank's board of directors approved a new share buyback program worth up to $30 billion. As of Wednesday, 77.6% of the 152 S&P 500 companies that reported earnings beat analyst expectations. Wall Street futures rose sharply on Thursday, helped by a spike in Meta. Shares in parent company Facebook jumped by 10.9% in a pre-market trading after Meta reported a surge in the second quarter at revenue that beat Wall Street's financial targets. Meta was followed by the tech giants who anonymously rose by 0.5% and 1.8% before the opening bell. Netflix added 0.8% after announcing a restructuring of its advertising partnership with Microsoft and lowering ad prices. Shares of chip makers including Nvidia, Micron and Marvell Technology rose by 2% and 4% after Lam Research forecast bullish quarterly sales. But not all sectors were optimistic. eBay shed 5.3% after forecasting third quarter earnings below market expectations. Shares in oil giants Shell and Total Energies stumbled after both companies failed to meet forecasts, reporting a significant drop in second quarter profits. Banks are another sector in the focus of attention, which today can raise or dampen the growth of the stock indexes. Citigroup, Wells Fargo and Bank of America rose 0.2% and 0.6% ahead of an open Fed board meeting to discuss rules for implementing the banking agreement. The discussion will take place today and could significantly increase capital requirements for lenders. The U.S. economy expanded in the second quarter faster than expected because the labor market resilience propped up consumer spending, whereas companies increased investments in equipment. The U.S. gross domestic product grew by 2.4% sequentially from a 2% growth in the first quarter. The region defies expectations of a decline to 1.8%. The picture showcases the fact that, except for the housing market, the U.S. economy meets the challenge of the Fed's monetary tightening, and the number of durable goods orders jumped by 4.7% in June onwards from a 2% in May. And this score also surpasses the consensus of a 1% increase. Durable orders rose to the greatest extent since July 2020 and for 4 months in a row. The labor market remains overheated. Initial unemployment claims dropped by 7,000 last week to 221,000. The consensus was about an increase to 235,000. The currency market is on a roller coaster for the second day straight. Major currencies survived the Fed's surprise and are anticipating remarks from Christine Lagarde. The euro traded higher in a midday but reversed downward in the New York pre-market. The US dollar index is determined to recoup early losses, having gained 0.5%. It's trading at 101.40, and the intraday CAD for the index is seen between 100.90 and 101.70. The U.S. currency had a gloomy session on a Wednesday because the Fed announced a widely expected rate hike, but surprised investors with the economic assessment. Jerome Powell gave credit to the disinflation, pointed to the dependence on further data, and said that Fed officials no longer predict a recession and there is a chance to bring inflation down to the target level without losing jobs. Treasury yields and the US dollar weakened overnight, but today the greenback was helped by the euro's fall. The ECB also raised interest rates by a quarter percentage point to 3.75%, and the market is just getting ready to digest Lagarde's press conference, so major currency pairs could reverse their trajectories tonight. The Canadian dollar lost ground against its American peer because oil prices tumbled, and following the Fed's decision, the loonie regained its footing. The USD CAD pays are trading today at 1.3177 on 0.2% down. The intraday CAD is seen between 1.3140 and 1.3210. The Bank of Canada whined the delay of raising its key rate at the last meeting, according to the minutes published on Wednesday. The 6 members of the Governing Council discussed whether it's appropriate to raise the rate in July or wait for more evidence. Governing Council members also agreed that they were ready to raise interest rates even higher if inflationary pressures do not ease as expected and movement towards the 2% target stalls. But they don't want to do more than they have to. The Bank of Canada's rhetoric is quite similar to the Fed, and the minutes had little effect on the loonie, but oil quotes are giving momentum to the Canadian currency. Brent and WTI futures were up 0.6% and 0.9% intraday, respectively, helping the loonie gain strength. The crypto market is in a limbo, though top cryptocurrencies are trying to close with gains. However, Bitcoin slipped by 0.3% and to trade at $29,500. Ethereum and Ripple shed 0.2% and 1.2% respectively. Other popular altcoins are trading in the green. Apart from the potential end of the Fed's tightening cycle, the crypto market received a good signal from US lawmakers on Wednesday. The House committee agreed on a bill that it intended to regulate cryptocurrencies, expanded the oversight of the Commodity Futures Trading Commission, and also clarified the jurisdiction of the Securities and Exchange Commission. The bill has been cheered by participants in the crypto industry who say that with a Democratic backing, the bill could win Senate approval, and today it will be considered by the Committee on Agriculture. Speaking about the intraday outlook for Bitcoin, it has been stuck in the range between $29,200 and $29,700. If the token manages to overcome the upper border and settle above it, the door will be open to 30,000. Otherwise, the crypto may continue trading sideways. The worst case scenario is to slip down to 28,600. Make profits with the InstaForex and see you online tomorrow.